Thursday, February 10th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at gold and silver and why, in my opinion, the long-term technical picture for the price of gold and silver look very interesting. I think we're on the threshold of a major move, a major move. Before I start though, I'd like to let you know I did a long interview, very interesting interview with London Paul of the Serious Report. I've spoken to him a few times already in the last 6 or 9 months or so, and I published it yesterday, late yesterday, London time. Some of you might not have seen it. If you haven't, go to my YouTube channel and click on videos and you'll see it there. And we went through a lot and Paul was very generous with his time. Back to the main subject, gold and silver, of course. And I like to say before I start that this is probably more for the trader, the speculator, even though the term speculator, I guess, can be used in different ways or in different circumstances. After all, anything we decide to do in life, be it very risky or not as risky, is part of speculating. It means looking into the future, speculare from the Latin, to look into and try to decide. But in this case, of course, is more to do with markets and risk. My longer term view of gold and silver is that they're money, of course, and that, they're insurance as well against the monetary mayhem that we're seeing. And it is monetary mayhem, especially with what's going on with prices. And I always say prices because we've had the inflation in spades for the last 1.5 decades, I would say, and now it's coming home to roost. And it's one of the reasons why I think central bankers, mainstream economists, the Wall Street crowd, and even a lot of people in the alternative space, they didn't see it coming, the prices rising, because they're looking at things like money velocity. They weren't really looking at the increase in the supply of currency and credit, which of course leads to higher prices. We hadn't seen higher prices in the consumer and commodity sector for a while, so people thought there was no inflation. But we've got the CPI data today. It's expected above 7%. Does it really matter? I don't think so. It's probably priced in. There will be short-term noise in the markets, but it's going to continue until the central bankers and governments rein in their stimulus. And by that I mean we need to see a decrease in the money supply. We need to see a decrease in government spending. We need to see, unfortunately, higher taxes. I'm not for taxes, but in this case we do. And if they do that, of course, there will be riots out there. It will be even worse than the truckers' protest. And that's why they're just like hoping, the central bankers are hoping and wishing that this pesky CPI goes down back to 2 or 3 in 2 or 3 years. And the bond markets are still buying into this rubbish. That's how I see it. And they're going to be proven wrong. So with that, let's look at the technical picture for gold and silver. And yes, I said a major move, because nothing in life is certain. And I always try to think that way. Nothing's guaranteed, but the probability, in my opinion, for the long term is very positive for gold and silver. And that would mean negative for the fiat currencies, and that makes sense with all the debasement of the currencies that we're seeing. Whatever happens today in terms of CPI and the move in markets, it's going to be short term. So what I'm going to look at today is continuation patterns in technical analysis. And I recommend this book, Technical Analysis Explained by Martin Pring. And this is, of course, for the trader, for the speculator, and it might even help you in the long term as well to see the underlying trend of a market. In this case, unfortunately, we do look at gold and silver these days, and by these days I mean since the 70s, as trading instruments. And that's one of the problems, and that's one of the reasons people trade paper gold and silver. I saw someone tweet yesterday that they were going to short silver. Well, I didn't reply to that, but to short something, you have to borrow that thing and then sell it. And I wonder if he was going to do that. He was just probably shorting the futures. But you know, people who know what's going on, they're not going to go out and sell their silver bars or gold coins before the CPI number and then wait for maybe a correction and buy it back. So what I'm trying to say here, yes, this is for traders, and it's it will give us also an idea of where I think we could go. So Martin Pring talks about flags, pennants, wedges, and gaps. So, and this is what we're seeing here in gold and silver. In gold, we have a very long-term formation with a pennant, and in silver, a wedge. A continuation pattern means that something is going to continue. So let's start with a gold chart. So this is a monthly chart. And if you look at the low from, let's say, August 2018, it was just below 1200. Gold pretty much went non-stop to 2070 back in, let's say, it was August, September of 2020. So yes, there were ups and downs, but looking back now, it was almost like a straight line, and it took almost 2 years. So we went from 1200 to almost 2100, about a $900 to $950 move. And ever since then, though, we've been consolidating. So the trend here has been up, of course, from 2018 to 2020. So that's the that's the trend. The trend has been up. So now we've had the pennant, as you can see here. There's been a lot of false breakouts, and I have to admit, it's difficult to know how long the pennant is going to last. But the important thing here about this pennant is that we're getting very close to the apex, or to the end of the pennant. And as you can see, we're breaking out of it. We've tried recently in the last few months, and it's failed. But right now we're above the top of the pennant. And usually the way a continuation pattern works is that you add the length of the first move higher, which was from 2018 to 2020. So let's say $900 to make it easier, and you add it to around 1800, which is where we're breaking out from now, and you get 2700. And yes, it could probably take a couple of years, just like the first leg took a couple of years. But I've just drawn this roughly here. It takes us to somewhere in 2024, and it takes us to around 2700. Yes, there are some. I saw yesterday someone tweet that they think we could be doing what we did in, let's say, 2011 and 2012 that we could actually fail and break down like we did. Yes, of course, that is possible. I said nothing is for certain. And but on a technical basis, these continuation patterns, they work about 75% of the time. And looking at the fundamentals, the inflationary fundamentals, I think we're much more liable to go higher in gold and silver or lower in the fiat currencies. So that's how I see that developing. So now to silver. And silver as well, I've got a monthly chart. And the silver formation is a falling wedge. And usually a falling wedge happens in a bull market. And if you take silver from March 2020 to the high in August 2020, or even the high in February 2021, that's the move higher. That's the trend. And we've had now the consolidation through a falling wedge. And usually that's how it happens. In a falling market, in a falling trend, you have a rising wedge. And in a rising market, you have a falling wedge. And as you can see, we're getting very near to the apex of this wedge, or the end of this wedge. Could it go further? Could it continue to stay within that wedge? Yes, very, very possible. But with the way gold is trying to break out of its pennant, I would say we're pretty close. And I think this line here is around 24.40, I would say. So the projection is the distance that silver moved from March 2020 to the high around 30, and that's roughly just under $19. So you add that to around 24, 25, and you get the mid 40s. And the timing, of course, is difficult. I just drew that there to give us an idea where we could go. It could happen very quickly, just like it happened in 2020 with a move higher. So that's how I see it. I'm not saying, of course, it's going to happen today after the CPI, because it's a monthly formation. It's been developing for a few years. So I'm looking more at the longer term trend. Yes, short term, difficult to say what's going to happen, but trading short term moves in any markets, I would say you need to make it a business and watch it every day like a hawk. And when you see anomalies in the moves, then you can act upon it by buying or selling. So with that, let's quickly look at where the markets are this morning. It's just before 9 a.m. London time. We've got spot gold at 1831.60. It's down just over $1. Range has been 1836 to 1830. So this area here, just above 1830, 1833, is a key resistance. Yes, we've broken out of it, but I expect us to be hovering around this level prior to the CPI number that comes out at 8:30 Eastern time or 1:30 p.m. London time. Silver is unchanged, 23.30. Range has been 41 to 17. The Dow future is unchanged, actually. NASDAQ is down 62 points, or 0.5%. S&P is down 12, or 0.25%. The FTSE is unchanged at 76.50. Sterling is up slightly here at 135.54. The euro likewise at 114.31. Key level in the euro is 114.85. And that's a very important level because the euro has rebounded quite a bit versus the dollar of late. The dollar is unchanged versus the yen, 115.57. and unchanged versus the yuan, 636.25. Aussie dollar up slightly at 71.85, and the dollar is unchanged versus the Canadian dollar, 126.70. And the Kiwi dollar is 66.86. That's unchanged. To the commodities, we got WTI up 0.2%. WTI crude trading just below 89. High-grade copper actually is moving quite significantly here. And that's a pretty interesting move here. High-grade copper has been consolidating as well for almost a year, and right now we're at 465 high-grade copper, and it's up over 1%. And as you can see from this chart here of high-grade copper, the all-time high prior to last year was right around here, and the high from last year was around 488, 489. So I think that's another sign of the inflationary pressure, the fact that copper is starting to move higher. And yeah, what about the carbon emissions? That has come off a little bit from when we last spoke yesterday, but it's up overnight 2%, but it's at 92.68. To finish off, look at the 10-year yield. That's backed off a little bit in the last day or so. We got up to almost 2%. Right now we're up 1 basis point overnight at 1.94%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.